It was a very good holiday season. We had apparel, which did better than expected. Department stores were down, but that was due to the closure. Let's move forward, because moving forward, it's about a lack of clarity going into 2019. We have higher interest rates, the uncertainty of tariffs. Companies may have built up inventories, and check out those comparisons. First half of 19 overall for retail, many of them had double-digit sales increases. So it's tough to comp the comp. And when guidance comes out over the next few weeks, I would think the earnings increases may be less than they were this year.
I mean, I think this is such an important part of the story right now, because we keep looking at all these numbers. Who was it we were just talking to on, I guess, Monday? I was thinking it was Friday. On Monday, who was talking about, Joe Zeidel had just gone down to Disney World and said there's no sign of any weakness in the consumer there, that there are lines everywhere, that people are willing to spend.
Or gum wrappers or trash of any kind anywhere on
place.
The entire property.
But
didn't see either.
What does that, I mean, if we can see all of these things, no signs of weakness, why are we so worried about what's coming? What's on the horizon that we're worried?
Because you see the housing cycle moderating a little bit. We've certainly seen a little bit of that. You've heard company after company talk about higher wage costs, higher freight costs. And when you think about the margins, was it as good as it could get in 2018? What does it mean for 19? We do have tailwinds. You have a full employment economy. You have wage increases that are happening. And you have some tax benefits from withholding. But if these tariffs come through, companies are going to need to pass on some of these price increases in the form of higher prices to consumers. That's an uncertainty, too.
It seems like the market is also struggling with, and to your point about cost, just exactly how much this investment buildup in omnichannel for the Targets of the world and others is just the run rate now in the cost base. Is that what you have to assume?
Definitely. When you look at 2018, capital expenditures dollars went up. They went up because companies got the benefit of lower taxes. You won't see that same benefit in 2019. And overall, it does take at least 100 basis points or more in order to pay for free shipping and these omni-channel investments. You need to have both. And in the new world, it's a lower margin business than it was in the past.
The key probably, though, is that anybody who hasn't been spending and bulking up on this omni-channel presence is going to be in big trouble the longer we get into the future. So you look at somebody like a Sears. What other players do you look around and say, ooh, they have not invested for the future?
We've seen a bunch of players not invest for the future. We've seen companies, department stores like Dillard's, not invest as much in the future as others have. Many of the department stores have invested, like a Nordstrom, like a Kohl's, and like a Macy's. You haven't seen it from Dillard's. We've seen some of the specialty players have work ahead of them to invest. We've seen some of the women's apparel retailers struggle as a result of that, and it's not getting any better for them.
We've also talked about the death of the mall, and I remember that being a story we've talked about for more than 20 years, but it does seem that in 2018, it was kind of coming to fruition in some areas. It's not the death of all malls, but it's definitely the death of some malls.
Definitely. You have a bifurcation. There's the A's and the B's pluses, and then there's everything else. And how do you reinvent yourself? It takes capital to do that. And that's why when you think of the weakness at Sears, it wasn't a matter of if, it was when. It takes a long time to kill a retailer. So as a result, you're seeing activities, and whether it's spas, whether it's gyms, whether it's co-working facilities, whether it's food and beverage, we're going to have a community center instead of just a mall.
That's a lot of doom and gloom. We're about out of time, but very quickly, what would your best picks be for 2019?
I want to stay domestic, and I want to look at off-price like Burlington. I want to continue to look at activewear and athleisure like what we see at a Lulu, and I want to look at PVH because of the valuation and the brands that they have.